Hello, traders. It's Tuesday, Valentine's Day, February 14th. What a crazy day in the market. We had the CPI come out earlier today. We got whipsawed back and forth both ways. The net result, nothing. We are still trapped in this trading range. Before I get into market analysis, let's take a look at our last pick, Sono. I'd mentioned to you that I liked selling the March 17th $20 puts at 60 cents. That would make me long at 1940. And currently, that trade is actually doing very well. We weathered a nasty little market pullback, and you can see how the stock has preserved its relative strength and how it's continuing to push higher. So I like this play. Can I call this a winner right now? No, we still got 4 weeks until option expiration, but it's okay. This is a longer term swing trade, and I believe that we're going to need to do more of that in the future. So you're going to see a lot more swing trades out of me. That's the good news. Right now, the market is trapped in a range. It has been able to defy gravity. We've had a lot of bad news recently. The intraday ranges, lots of choppy movement back and forth. Buyers and sellers are engaged. That tells me we're at an equilibrium point. Much more difficult to make money day trading than it was even just a couple months ago. That means we have to shift gears and we have to do more swing trading. So here's SONO. You will also notice that there are some green lines on the chart. These are our automated trend lines, and you can see there's a trend line right here that has been breached to the upside. We tested it briefly. That support has been confirmed. Here's a long-term downward sloping trend line that was breached to the upside. Also bullish. Here you can see that we're challenging an upward sloping high plus trend line. If we get above that, another bullish sign. But again, this is a longer term trade. I want to buy this stock at $19.40. That's why I sold naked puts. If I get assigned, am I worried? No. I want to own that stock. In fact, you probably could have gotten 80 cents, maybe even 90 cents for those. You're going to be generating a 15% consolation prize if you are not assigned. If I am assigned, I bought a stock that I really like way down here at a price I really like. So that's the strategy. I'm going to show you a bullish put spread today. I've got lots of videos on my YouTube channel about selling bullish put spreads. I have 2 videos that are each an hour long. So if you're not familiar with the strategy, please make sure to watch those. Let's take a quick look at the market and see what happened. Holy cow, did we have some movement today. So the market gapped down on the hotter than expected CPI number. It came in at 0.5, and you can see how buyers instantly came in and gobbled that news up. Stacked long green candles. Yeah, baby, we're off to the races, right? Not so fast. Now we get a couple of wicks up in here. We get a little bit of a almost bearish engulfing candle, and then sellers impose their will. Whoa, big drop. Okay, cool. Now we're going lower, right? Long red candles, new low of the day. No, now buyers are back in, and we have this gigantic wedge forming right here. Let's zoom out to the daily chart because that is what we really need to watch right here. Look at this price movement. Up, down, up, down, up, down. Net change, nothing. We're going nowhere. You know, if I zoom out, which we'll do right now, you can see that with the exception of a couple of periods back, this was back in August when we had a nice post-earnings spike in the market. And this is October when we had our fall jitters and we had a sell-off to a new low. If you take out, just crop off that top right there, crop off that bottom right there, you've got a range from here to here. And we've got some nice movement back and forth between it, but we do not have a massive market meltdown. I believe that the market is getting numb to the inflation news. I believe that it is numb to supply shortages. I believe it is numb to Ukraine. And you've got a ton of money, record levels of cash sitting on the sidelines. What to do? You put it into bonds, you put it into stocks. You know that if you just have cash on the sidelines, you are a net loser just because of inflation. Your purchasing power is continuing to go down. So you got to put it somewhere. Well, right now, stocks are getting a nice bid. And by the way, companies are actually able to pass higher prices on to consumers. They do that because they want to maintain their profit margins. They have pricing power. Well, if you're looking for a place to put your money, why not put it with a company that has pricing power? Those stocks will go up. Yes, inflation will go up, but so will their profits and so will their stock prices. So I feel that right now the market is in a wait and see mode. I don't believe there's going to be a credit crisis. I believe that that window has passed. Yes, when the Fed was hiking interest rates 75 basis points at a crack, ka-chunk, ka-chunk, ka-chunk. Yeah, there were some big concerns. These are the biggest rate hikes that we've seen in 40 years. Are they done? No. So there's a dark cloud looming on the horizon. But we're through those 75 basis point rate hikes, and we're closer to the end than we are the beginning. Yeah, but inflation was hot. Yeah, it was hot, and it's going to be stubborn, and it's going to stay high for a very long period of time. So that's another headwind. Valuations, they're high. We just got the last round of earnings, and I got to tell you, they were pretty dang underwhelming. So, why is the market treading water here with all this negative news? I don't care. I don't care why it's treading water. It doesn't matter to me. To me, it tells me that asset managers who have to place money, they are not looking at what's going to happen a month from now or 6 months from now. They're looking at what's happening a year from now, 2 years from now. Do I feel that this is a compelling value a year from now? If the answer is yes, they're putting money to work now. So again, I don't see a major credit crisis happening. China is starting to reopen. There are some positive things that are happening as well. The underlying theme here is neutrality. The market is not going anywhere. It's just stuck. So let's generate some income. Let's sell some out of the money bullish put spreads. Let's sell some out of the money bearish call spreads, which, by the way, regardless of which side of the market you're on, if you're bullish, then you want to sell bullish put spreads. Now, this is a neutral to slightly bullish strategy, but it is largely neutral because we are distancing ourselves from the action. So the market can chop around, it can go up a little bit, it can go down a little bit. These spreads are simply taking advantage of time premium decay. If you happen to have a bearish market and bearish market bias, you can sell out of the money bearish call spreads on stocks that are relatively weak. So you can choose either side that you'd like. We use relative strength and relative weakness to increase our odds of success. So that's what I currently feel is happening in the market. So let's take a quick look. Now I'm going to go through a couple of searches here, but I'm going to go on the bullish side because I am a little more bullish than I am bearish. Not overwhelmingly so, but the market has recently deflected a lot of bearish news. So I believe that stocks are finding a bid. And here is a stock and an example of one that I would like to sell an out of the money bullish put spread on. So let's make sure that we have our 1OSI indicator up, because if the orange line is above 0, then we're going to know that the stock has some relative strength. And you can see, although barely, it is above 0. In general, Boeing has been really nice and strong. And you can see that these longer term green trend lines are coming into play right at this resistance level. If the stock is able to break through those green trend lines, it is going to fuel the next leg of the rally. So I want to take advantage of that, but I also want to take advantage of the general strength in the stock and the fact that I can sell an out of the money bullish put spread below this technical support level. This is a compression. You can see how the range is very, very tight. So what I'd like to do is you can see the low end of that range comes into play at 205, $205. So what I'm going to do is I'm going to sell the $205 put and I'm going to buy the $200 put. Let's take a look at that option chain and we'll be able to see where those prices come in. And you can see there's the 205 put, there's the 200 put. Right now that spread is 81 cents bid, offered at $1.10. We've had a wild market today, get a little bit of a market dip today, that spread should come into play. Or it could happen tomorrow because this is a month out. We're bound to get filled sooner or later because it's in range right now. So maybe an hour from now, could be tomorrow, but I like the spread. And the plan is to let time decay wither away at that spread. If the stock happens to break out to the upside, that spread is going to narrow, meaning we make money on it right away. If by chance something awful happens in the market and the bottom of the market falls out, then the game plan will shift. We'll buy back our 205 puts, provided that we still have plenty of time till expiration. That would be a major technical breakdown. And then we will sell the 200 puts as the stock continues to fall, knowing that that support level has been breached. So relative strength is something that we're leaning on. We're also leaning on the technical support level at the low end of this compression. And we're taking advantage of time decay. You can also see that this spread is more than 2 standard deviations out of the money. So we also have a statistical edge to the trade. The red line is 1 standard deviation. The blue line is 2 standard deviations. You can see that the stock has not traveled very far. It is currently at $219. So it can drop $13 or about 6.5% in the next month, and we're still okay. Spread is still out of the money. So that's why we like selling these spreads. This is a good environment for us to do that in. Market's not going anywhere. Let's take advantage of time premium decay. I'm going to flip through a couple of other stocks, but that is your stock pick of the day. I told you I was going to do 2 videos per week, so I'm going to stay on track. I'm going to get you those 2 videos. We're just about to release our trend lines, and I'm going to show you a few on the chart so you'll see what they look like. Now, these are the current trend lines that are coming into play. You can see they're automatically drawn. This is a very long trend line that's been breached on the upside. ANET. I like it. It is a post-earnings play. Earnings after the close yesterday. Look at it get right through that. It's going to take out this horizontal resistance level. Let's take a look at the 5-minute chart. There you can see stock rallied up with the market, but when the market made a new low today, we'll go back to that 5-minute chart so that you can see the relative strength. Look what happened. The market took out its low. It gapped down, took out that low substantially. What did ANET do? Rally, rally, rally. Its low of the day was still way above its opening price and way above the prior day's close. Relative strength, I like it through that downward sloping trend line. Let's flip through a couple more and then I'm going to call it a day. Team, TEAM, upward sloping. We call this a high plus. Broke out there. Yeah, it's still trying to get through that. It has filled this gap. That's nice. That's bullish. It's got a little bit of resistance at the 200-day moving average, which is coming into play pretty close here. But yeah, in general, the stock price action looks good. Here we've got NUE downward sloping. This is a bullish flag formation possibly in here. Could be a good one. We got BA we already took a look at. Only going to look at a couple more. NET. Nothing but net. This is earnings after the close. Stock gaps up, pulls back. Two long-term downward sloping trend lines breached to the upside. Here's a horizontal high plus trend line breached to the upside. Stock looks really good. Here's another indicator that we like using, LRSI. We have this in Option Stalker Pro. When it's above 80, that's a bullish sign. That's another confirming indicator. Relative strength above 0. Really nice relative strength. Good volume. Positive earnings reaction above the major moving averages, above horizontal resistance, above two downward sloping trend lines. Great relative strength today. Let's put up that 5-minute chart. Did you see how easy it is to find these trades using those trend lines? They provide us with so much clarity. I can't wait to get them in your hands. That's all I've got for you today. Look for another video, maybe Thursday or Friday. Thanks so much for watching. Please leave your comments. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.